Welcome back. You're watching the Weekly Brief. I'm Shweta Kothari and Karthik Malhotra, Rakesh Khar continue to be with me. And what caught our eyes this week, Karthik, Rakesh, is by the way of S&P upgrading India from BBB negative to BBB. Now, what does it mean for India after 18 years? We're getting an upgrade. And there are a couple of other items. I also like to bring in EY report on India, which says India is going to be the second largest economy in the world in PPP terms by 2038. Two news items coming in a week where India has been reeling under a lot of criticism, pressure by the way of US tariffs. What do you make of S&P rating, and how is it? What sort of impact will it have? What does it really mean for India?
Theoretically, anytime the rating is upgraded, it means the potential of investment coming into the country increases. It means the ability for the government of India or for the private sector in India to take some loan upon itself from outside the shores of India. The possibility of that, the probability of that increases. People are more willing to lend to you because you have a better rating. I think the default ratings very clearly suggest what capacity are you ranked at to repay that debt. Right. So it improves the investment climate. It improves your credit worthiness. It's pretty much like the CIBIL score, right?
If you have money outside,
if you have a good CIBIL score, you're likely to get a better interest rate from your bank. You're likely to be offered loans cheaper, and you're able to just spend more money and give a fillip to your style of living if you intend to. And that goes pretty much for the country as well. The country can improve the standard of living and undertake some expenditures that it must be holding back on because it has easier access to capital.
All right, so higher, sovereign credit rating for India after 18 years. What changed?
Shweta, I've been watching these ratings. There is a sense of, excitement. Obviously, once it's anything which is improving on the face of it gives that excitement. But India has done pretty well even when our ratings were not raised.
Yep.
So, various governments through the last 30 years I have seen have looked at ratings with some amount of distance.
Okay.
So you would have noticed even now they're not extensively excited and going public and saying that bada kamal ho gaya, humne ji itni rating banai. So I think Government of India, whichever is the color of the combination which is ruling it, feels that ratings is an external perspective, and we need to be conscious of it, but we don't need to be too excited or be too agitated about it not coming through.
Right.
Fundamentally, economically, it makes sense to have better ratings. And, globally now you've seen in this Trump era, in this tariff challenge, people who are very knowledgeable and thought leaders in the economic space themselves are betting on India, saying that it's one of the biggest economies to watch out for. And that is reaffirmed by these ratings.
All right. Now, I have to talk about Trump tariffs because that's the big update coming this week. And on the back of that, we also have, other agencies giving India economy a thumbs up. Now, what we do know so far is that 50% tariff penalty has kicked in. 25% is because India continues to have oil trading relations with Russia. But other agencies who are looking at India says that there may not be a dent on economy, a substantial dent on economy that could perhaps hamper India's GDP growth beyond a year or two, which means India will easily recuperate, Karthik. That's the message also coming in.
See, honestly, India is not hit to recuperate, but the impact of the hit is going to be seen over the next few quarters, I believe. I think markets are reacting very adversely, and rightfully so, because markets are driven on sentiment.
That's an imminent hit right now.
Markets run on sentiment more than on the fact and the numbers which eventually come out. Markets are perceptive. Markets react before the actual data comes out, and then markets react again once the data comes out.
But even on markets, Karthik has been range bound in terms of there's not a massive lift from 80 to 60,000.
1% daily hit. Of course, I mean, I'm not saying we're in a bear market,
but
markets have reacted more negatively.
0.4 to 0.6% of GDP, that's the hit. We discussed it last episode. So $40 billion is the total kitty. Out of that, how much is exactly impacted depends on how we look at it. And because service imports.
It's actually less than $40 billion. Some are saying 3/4 of total exports, which is about $87 billion in 24-25. About $30 to $35 billion is likely to be impacted.
That's what. So because there are different sectors, electronics, different prisms. But the point is, I think overall, even if you were to take, let's say, a 50% hit on tariffs by account of 50% tariffs, right? So let's say, how much is the world also going to supplement what India supplies to the US? All that is going to take time, and hopefully by then again there is news emerging that the bilateral trade agreement could again be on the table at some point. So I think worst case scenario, we are looking at maybe a few basis points 10 basis
0.7.
points, 20 basis points,
That's
30
right.
basis points. Is that really going to dent India's overall growth prospects? No. Is any other country going to take India's spot in being the fastest growing major economy? I doubt it.
Right.
But coming back, tying it back with, let's say, the ratings conversation that we were having earlier. If you remember last year, Fitch was on the verge of downgrading US itself on its credit
That's
rating.
right.
So I would be more curious to see what is the credit ratings analysis maybe in the next quarter or so on US itself.
Okay.
Because US does not enjoy
Outside of
a
ratings,
AAA. US does not enjoy a
key
AAA. It's a
economists have
AA.
already- Key economists in that country and outside have already started. Jeffrey Sachs is going hammer and tongs against
Right,
the Trump
of course.
administration.
That is on the overall inflation, and because of inflation, the impact on the US, on the US economy.
The way Trump is treating the world, the world is treating Trump.
But I think again, by way of ratings also don't just look at how much forex reserve does your central bank have. It also looks at political continuity. It also looks at political stability.
Right.
What is the kind of stability in the US right now? One doesn't know by way of all the policy fickleness that we are seeing.
One common
By
term
way
that's
of
coming is unstable.
Absolutely.
Unstable. Everything about US.
Policy
So
unstable.
US last year was on the verge of being downgraded. Even now, US is not in the top 10 best rated economies. Neither is China. You have countries like Switzerland, Sweden, Norway, Denmark, Australia. You have a pack of 10 countries which enjoy that pristine AAA rating. US in itself is a AA rating.
That's right.
China, I think, is a B positive, if I'm not mistaken. It's a BB plus, so it's ahead of
BB
India.
plus, yeah.
BB plus, so it's ahead of India, but China doesn't have pristine rating. Look at countries in our neighborhood. Look at Pakistan, for example. Pakistan is almost on the verge of junk rating. I wonder why it is not a junk rated country as yet. It should be in the junk rating or the speculative rating. It's not. So I agree with Rakesh. I think we've got to take these ratings not with a pinch of salt, not with a teaspoon of salt, but with a bucket of salt.
All right. So, but while it may not be extremely joyous right now, by the way of what ratings have come out, it is definitely a thumbs up to India's economy. And it comes, as I said, at a time when we're looking at some sort of uncertainty going forward. We don't know to what extent Trump tariffs
It's
will impact
universal.
us.
That uncertainty is universal.
Coming back to the
100%,
first story
but,
of
a lot
GST,
a lot-
Shweta, I think we should tie this opportunity and आपदा में अवसर जो प्रधानमंत्री कहता है, it has to move into a grassroots reality.
Right.
We should convert this opportunity to quickly enter other markets. And I believe firmly that we cannot divorce the intensity and the intrinsic nature of our relationship with the US.
100%.
We should not do anything stupid like Trump is doing, while as we keep waiting and build other relationships. But India has to stay invested in US has to stay invested in
Right.
India.
So that brings me finally to what are the options India has at the moment and how can it really help its textiles, gems and jewelries, shrimp industry. One of the things India has done as of yesterday is ensure that it outreaches to as many as 40 countries to ensure that there are different supply chains, alternate supply chains in place. Many are suggesting perhaps some sort of credit to be given to some of these industries, moratorium period extended. What is the way forward when it comes to how do we really tide over the uncertainty, political, economic, whatever you call it right now? Prime Minister is also actively reaching out to Japan, to China.
Yeah.
He's ensuring that we have better ties, Karthik, for that matter. Existing ties should be made better. If we cannot better our ties with the US,
Right.
perhaps look
You're
at
right.
alternative
You're right. So I
countries.
think the government is already on its front foot, going ahead and batting at every possible opportunity, whether it is Russia, whether it is the SCO summit in China, whether it is a meeting with the Ishiba Shigeru, the Prime Minister of Japan, whether it is the EFTA region in Europe, with which we are hoping to go ahead and close a trade deal, whether it is EU, we are hoping again by end of this year there's going to be a trade deal,
Yes.
whether it is UK, with which we have
Already
closed
have.
our FTA. So I think the government is going all out to make sure that supply chain is not limited only to few sectors catering to few markets. I think the universalization, the globalization, which
a huge opportunity.
which US has divorced, needs to now
Absolutely.
be embraced by India, and I think India is going
So we
ahead
need to
and doing that.
reimagine our place in BRICS, which is already happening.
Yeah.
We need to reimagine our relationship with the EU. UK we already have done. We have to further enrich our relation with the Middle East. We're in UAE. Incidentally, the other big story
Yeah.
that we did was
Yeah.
the She Economy Agenda Summit this week that got
That's
put
right.
off in Abu Dhabi.
All of us did, sir.
No, it was brilliant because
Right.
again tied to the India growth story is the women GDP.
Right.
So in that sense, it's a leg up to that particular perspective and that proposition.
All right, I think to briefly sum it up, we don't know the extent to which India's economy will be hurt, if at all, by the way of Trump tariffs, but we do know that there is a thumbs up coming for India's economic growth story, both from S&P and EY this week. We'll have to, of course, wait and watch for how the Trump tariffs pan out and whether India will be able to finally arrive at some sort of trade deal with the US come the next week.